Good morning, everybody. This is Patrick MontesDeOca with the live trading room here at the Equity Management Academy. One of the things I want to share with you right away is a report that we published in the Associated Press through Seeking Alpha on September 17th of this week. And I would like to share with you the report. And then we will take a look at the market and analyze where we are in terms of gold, silver, and Bitcoin. Hello, everybody. This is the Equity Management Academy Weekend Podcast for September 17th, 2021. Gold. A 20% price gain from the current seasonal lows possible into early 2021. Summary. Retail sales numbers unexpectedly jumped in a sign of a resilient economy, which triggered a move down in gold. Fundamental data continues to make the market nervous since such fundamentals continue to be mixed. Precious metals have been in a corrective pattern since last year. Physical gold and silver are in short supply and demand high. Fundamentals. Gold is in a fast market to the downside. Retail sales numbers unexpectedly jumped in a sign of a resilient economy, which triggered a move down in gold. Fundamental data continues to make the market nervous since such fundamentals continue to be mixed. The fundamentals do not appear to apply to the precious metals markets. Precious metals have been in a corrective pattern since last year. Physical gold and silver are in short supply and demand is high. The Variable Changing Price Momentum Indicator, VCPMI, annual analysis predicted a rally of about $30 to $40 to close above 1810, as we published in Seeking Alpha, September 12, 2021. Quote, the market came down to the annual SMA of 1771 and reverted to close above the annual mean of 1810. It is still within a range to complete the annual pattern a week earlier or a week later. The initial confirmation that this bottom is in place is a rally from current levels of about $30, $40 initially, or a close above 1810, activating the annual targets of 2164 to 2442. A test of the resistance at these levels into September 14th, 15th of this month, and subsequently a retest of the current lows into the 28th of this month would be a perfect picture for the next 2021-2022 annual bottom pattern to be completed for our next calendar year, beginning September 28, 2021 to September 28, 2022. 1791 was the buy trigger and 1810 is the target and is the annual average. We have been trading in that range and have been pretty choppy. If gold closes above 1810, then we are looking at targets of 2164 to 2442. On September 14th, gold hit 1810 and entered a strong area of resistance, according to the VCPMI. There is a strong likelihood that sellers will come into the market at that level. And then it closed below 1810 and activated a bearish signal on the 15th. It came down to complete the extreme below the mean on the daily and test the buy 2 level of support. If we get a confirmation of a buy signal on a close above 1752, it will activate a buy trigger, which it just did. We are buying gold at this level. There is a 95% chance of a reversion back up from this level. It is not 100% accurate, but it is highly likely and probable. The initial target is 1770. We place a conservative stop at a close below 1752 using the 15-minute bar. The second option is a maximum dollar stop depending on your profile. We use a $1,000 maximum catastrophe stop when we trade. The monthly buy 1 is 1718 and the buy 2 is 1619. The market doesn't have to come down to these levels. They indicate possibilities and probabilities. We could be seeing a bottom formation based on the cyclical patterns. They are levels where you want to accumulate on the long side. The market at this point appears to be extremely oversold. We are below the annual VCPMI average of 1810, the monthly average of 1777, and the weekly average of 1752 is activating a buy trigger at these levels. Many markets are selling off, including digital currencies. Bitcoin is coming down toward the average weekly price of $47,328. Lawmakers are beginning to look into the digital currency markets. The market right now seems to be in the hands of a very few and seems unfair. The only currency that appears to be completely independent and decentralized is Bitcoin. We trade the Grayscale Bitcoin Investment Trust, GBTC, which is a regulated instrument. It offers more safety than some of the plays in digital currencies.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ematotrade.com, or listen to any of our previous episodes.
I wanted to share this report, and let's take a look at where we are. In gold, we are trading last at 1776, so we have completed the target pretty much of 1770, 1775 that was expected in that report. Gold is up 1170. So where do we go from here? The market has completed a day trading pattern. It's completed the initial target of 1775. And from here, all the way up to 1785, it represents levels of what it's called distribution of supply, that you can potentially begin to see supply come into the market from these levels all the way up to 1785. This is the first level of resistance, 1775, that upon closing above 1775, this resistance becomes support. It becomes the support and activates the next target of 1785. So if you bought long from that 1752 signal that we recommended, this is a place for you to be taking some profits initially and see what the market does from here. Now, if it closes below 1775, it's activating a short signal on a day trading basis. The signals on the left of the chart indicate the targets for today as a day trader. On the right, you have the weekly numbers that we trade against the daily numbers. So, just to review, the daily targets have been completed at 1775. the weekly signal is in a bullish price momentum. So we have a little bit of a conflicting signal here against the short daily trigger that was activated at 1773. The monthly average is 1777. This is the monthly mean or equilibrium or average price, 1777, which is another target that the market is looking to accomplish. Let's take a look at the radar screen here that we have and see what the AI is saying to us here. Obviously, you can see the same information here on this chart, and it's activating a short trigger. When you activate a short trigger, automatically your stop level is the level above. And we're going to go ahead and take a short signal on this.
Order filled.
And follow the methodology of the algorithm that is activating a short trigger. I jumped a little bit ahead of time here. We used the usually the 15-minute bar, but we've activated a short trigger, and you have a choice of 3 levels of stops. The most conservative stop is the close above in using the 15-minute bar. The second level stop is a dollar amount that you want to choose comfortable for your profile. And if you're doing multiple positions, then you can use the levels above to add to your position and use it as a stop as well. This is my other platform, Thinkorswim, which I use to trade and to combine the information on the TradeStation platform on the radar screen for my coaching purposes, basically, and also for my trading purposes. And here I can focus a little more. It's a backup to the TradeStation platform. So you always want to have what I would say a backup contingency platform when you're trading. You never know what's going to happen to the platform or to the program, so you want to be prepared. we are activating a short trigger. For day trading, short at 75, the signal came in several times. You can see the market trying to test this resistance several times and closes below, activate short triggers. We have 6 short triggers that's been activated, 7 with the current one. And it's still in a short mode. So if you came in long on derivatives or other assets, obviously you want to protect those assets simply by trading short term, hedging in the futures. At these levels here, the VCPMI identifies for you the extreme levels of speculation in the market. These levels here of sell 1, sell 2 begin to identify mathematically the probability levels where you are going to identify supply. And so the algorithm tells you the first time it touches it, it completes the pattern from below. A close below on the next bar activates a short trigger. Your protective level is the close above, 75. Conservative, you use the close on the 15-minute bar. To get out, aggressive traders can use a max dollar stop. I have $1,000 stop in gold, and particularly in silver when you have such a volatile market. You know, it can move 20, 30 cents in no time. And multiple traders with multiple positions can sell into this area with your protective level at 1785. So this is, as I say, and keep saying to my traders here, I like a GPS that you can use to guide your trading. And of course, depending on your profile, then you apply proper risk and money management and, you know, choose the instruments and so on and so forth. What we're trading here is in the futures contract. What we are investing in is basically stocks, securities, ETFs, derivatives. The other market that I want to take a look at is basically the Bitcoin market here that is in a bit of a corrective pattern since last week, as we have gotten quite a bit of regulatory rhetoric, is what I call, regarding regulation of digital currencies, digital assets, and Bitcoin. So what I think you're going to find out, or what they're going to find out, is basically they're going to have a hard time classifying Bitcoin as a security, and it's really more basically more like an asset. So it's going to be argued in terms of the classification for Bitcoin, but Bitcoin is about the only digital asset that it is completely decentralized from the system. So it's going to continue to offer a lot of volatility, but also great opportunity as the regulatory, bodies begin to settle basically the transparency of these markets, which I believe still has ways to go. Not necessarily for Bitcoin, but for the rest of the digital currencies, so-called currencies, assets outside of that. We trade derivatives in under Bitcoin, such as the Grayscale, GBTC, the Grayscale Investment Trust, and we also, in terms of just getting a little more diversification in other currency assets, we're following GDLC, which is Grayscale Digital ETF, digital fund. And let the experts basically, manage those individual assets within the fund. So I'm interested in the price action, and so these are the instruments that I am using for that purpose. Let's go back to the gold market here. Stalling at the 1775. What I want to share with you now basically is the AI actually that was produced by Nikki, the robot, and for our subscribers, our confidential subscribers, but now we're publishing for the public, and I want to share this and review once again.
Hello everyone, this is Equity Management Academy, with a weekly gold update, for July 2, 2021. Summary. The weekly trend momentum of 1840 is bearish. The weekly VCPMI, of 1778 is bullish price momentum. A close below 1778 stop, negates this bullishness neutral. If long take profits 1806 to 1834. Trading instructions. Weekly trend momentum, 1840, bearish. The gold futures contract closed at 1783. The market closing below the 9-day SMA 1840 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum, 1778, bullish.
So basically, the 1778 was the VCPMI as we came into this week, and as obviously the market broke down to that 1752 level that we just looked at, and we reverting from that level and into once again the average price.
With the market closing above the VC weekly price momentum indicator at 1778 is confirmation that the price momentum is bullish. A close below the VC weekly, it would trigger weekly stops and negate the bullish trend to neutral. Weekly price indicator. Exit longs, sell 1, 1806. Sell 2, 1834. Exit shorts, buy 1, 1760. Buy 2, 1732. Look to
1760 was activated, obviously, and this is on the weekly. On the daily, the signal was activated at about 1751. So 1770 was the initial target for the day traders, or for the near term. 1806 is the weekly now resistance that we're looking to accomplish. If we close above 1778, this is the target that's activated. So we are entering a level of resistance on the gold market. For those that want to get out with a stop here, basically 75 on the close of this bar, you can stop out if you are a conservative trader. a close above 1775 will negate this trade and basically will activate the above target of 1785. It appears that the momentum is still showing buyers inclined to bring the price up above 1775 so far. And it's basically for the technical purposes of the VCPMI, it executes it on the 15-minute bar, the close of the 15-minute bar. So if you want to stop out at that point, then you can do so in a couple of minutes, in a few minutes. Now, mind you, this is a short-term trade against our long-term position that we are bullish. We have long derivatives. So we are actually hedging at this point by trading in the future short. And if we get stopped out on the future, obviously, then we make that up on the hedge. And I'm going to buy back the contract here at the market for those that took the trade. Let's stop out at the market here.
Order filled.
And allow for the derivatives to continue to gain equity for us. This is the methodology of the VCPMI. It's not 100% guaranteed, but it is a probability model, I would say, that you can use as a self-directed trader in executing high probability levels. The math of the market basically still indicates that the market has entered in overbought condition between 1775 and 1785, and it recommends that this is an area that it could potentially accumulate or attract sellers that are going to be coming into the market. And so manage your position accordingly. Sometimes we can take a small loss on the short term. Let's see where the market goes as it continues to trade into this area, what is called an area of distribution of supply. Thank you, my friends, once again for the opportunity that you've given me here to share this information with you. And I do hope that this is making sense to you. If you have any questions, just please send us any request, and we'll be glad to respond to you. Thank you again, and have a great trading day. I'll talk to you next time. Take care. Out of your gold position, flat, above 75 conservatively, traders in my trading room, please. I am flat on the gold. Long on derivatives, flat on the gold for now.